Wow. What an interesting day to be alive. Good morning, good afternoon, everyone. My name is Ross, and as always, here it's Friday and our weekly update here on Data Dash. Guys, I decided to push this update slightly later because we had the NFP non-farm payroll data and the hourly wage data coming today an hour prior to New York Stock Exchange Open, which is 8:30 a.m. Eastern Time or 1:30 p.m. London time. And that number, if you remember, I've been waiting for a while. I indicated yesterday in our private alert group that if this number comes higher than expected, it can mean a lot for the markets and it can cause a huge sell-off into inflationary welcoming assets, just such as gold and silver. And that's exactly what happened. So with all that said, we're gonna go and cover in details what does it mean for markets going into the CPI print next week, what does it mean for crypto, what does it mean for silver miners, and also the tech stocks. So with all that said, stay tuned and let's go. First of all, I would like to point out it's a super interesting situation because we got a lot of conflicting data points. First of all, average hourly earnings month over month, we got 0.4 over expectations of 0.3 and over the previous of 0.2. Does it sound good? No, it can signify the probability of the wage price spiral. What the wage price spiral means to the market, it means that inflation is sticky and market wants to price that in. Basically, it shows that in order to keep the employees at a job, the companies need to pay more money because the prices are higher. So employees need to spend more money in order to sustain themselves. But once they receive more money, they are actually putting more oil in the fire of inflation. They are spending more money. So inflation is perpetuating, and that is a troublesome signal for the market. So these very negative, right? Negative, now we need to define what negative is. Negative in which regard? Negative in the regards that with that kind of behavior of the market, the Federal Reserve is not going to cut the interest rates, right? So they're going to stay higher for longer. However, on the other hand side, when we look on a non-farm employment change, these numbers are very high. It means that there is no recession coming in. It means that 272,000 new jobs are being opened instead of expectation of 182K. This is almost 100,000 miss. It's a huge miss. It's a number of jobs that is created in economy. And also if you compare it to the previous 165, it clearly shows there is no sign of recession, and it also shows to the market that there is no probability for the Federal Reserve to start cutting, and that obviously also negatively affect the risk on assets. But on the other hand side, the third number that was released today, unemployment rate, is also higher than expected. And unemployment rate, I can tell you guys, because I've been watching Federal Reserve conferences for the last 5 years, no misses at all. I know what the Fed is highlighting in their interviews. The unemployment rate is supposed to get towards 4.3, 4.5, and they said multiple times that's what really matters to them, answering the journalist questions like the KPI that they're going to maximize around. They're not going to take these as a priority, they're going to take these as a priority. So if unemployment rate is getting higher, it can show to the Fed that once it reaches the point of 4.2, they can start speaking of the cuts, of the rate cuts again. And the rate cuts obviously going to be extremely bullish for silver and very bullish for the risk on assets, including crypto. So market is in a very tricky point until actually the CPI numbers are released on the 12th of June next week. Market is trying to balance itself, pricing in various information, and based on the gold and silver data yesterday, very bullish behavior, and the fact that ISM services PMI was significantly above the forecast and other macro data points, I was already given a hint by Mr. Market that the market is pricing in or starting to price in the cuts. So the market liked the last two ISM price prints, and if the CPI next week was supposed to go low, the Fed would probably cut at least several times at the end of this year. But now we are having this average hourly earnings increase, and that obviously makes the picture very, very conflicted. Like all the data points that came today are conflicted. And what happens in that case? What happens in the case when there is a lot of contradiction in the data? I always recommend everyone to look on how the market reacts. And what I mean by that, the bad news and the good action is actually very bullish. And so far, we are holding very well. Let's go into the charts and see actually what has happened. First of all, we see the significant spike in yields, 3%, 2.7% in a day on both 2-year, 10-year, and obviously TLT, which is the reversed related, because that's the price. They're always inverse related with the yields. We can see how we just opening up in a few minutes, 1.5% lower. It's a huge move for their multi-trillion-dollar market. And luckily, I sold calls to my TLT position here. So I would hedge and make a really, really nice profit here over just a few hours from yesterday closure into this morning. That's also what you can do if you are bidding on the upside but expecting a short drawdowns. That's where you hedge on those tops of the charts. I will have a separate video explaining how the call options work, but the idea is if, for example, you have an asset, it can be any asset, bond or anything else, can be crypto once the option chain is more developed for crypto. You are at 93 and you're selling the call option at 95. So if the price is anytime below 95 and lower, you collect the premium and you take the money. But if price is above the 95, you still collect the premium, but you're forced to sell at 95. So you're actually making that sale price 95 plus, let's say $1. So you're actually selling at 96 and you lose your asset. But in any case, that's something how you can plan or at least understand the idea of hedging and how that works. Now coming back into the markets, right? So I think here that precious metals are taking severe hit, and I actually indicated this yesterday. I warned our subscribers in the Telegram group. Let's see exactly what I wrote. I've been saying exactly that, just a warning for the silver rally. There is a risk of the sharp drop lower tomorrow if non-farm payroll come out far higher than expected. And this is exactly what happened, and that's exactly why we can have here, let's look a little bit closer on the chart. What does it mean actually for silver? In my opinion, it means that we might have a slightly lower targets, that this 29.5 target that I've been indicating. If you're gonna look here on the daily, I think right now it's quite probable that we can cover either 28 or 28.5. I recommend you rewatching the beginning of my Wednesday video because I've been actually showing you that also, you know, gold to silver ratio is slightly bullish here. Like, I'm not particularly happy about this market structure break. I think again, fundamentally we are going to 40, but on the other hand side, I really want that starting accepting back into the range, and that would really help the silver price, right? Once again, if we are looking a year from now, that will not all matter in the long run. It will not matter if you acquire the miners, let's say at 27 cents per share or at 29 cents per share, what they will be above $1. But it's still very important to not get shaken out of your position, to keep the higher conviction and to enter as low as we can. So these numbers that came in, and particularly the numbers related to the increased hourly wages, are giving a nice opportunity for metals to consolidate here, and for those who were not yet allocated into silver to increase their allocation, because I understand for some people it required to take money out of other investments, and for example doing on-ramp, off-ramp from crypto into the stocks, it might take extra time. So guys, here again, we are very lucky because this time is given. Never forget, as Dr. Alexander Elder mentions in his book, Trading for Living, the one that I really like and recommend to start with if you want to understand the psychology of the markets. There are three types of movements across the market. And if you compare it to, let's say, surfing or being next to the ocean, that would be meaning the tide, which is obviously bullish for silver, thanks to the gold to silver ratio, thanks to where and how the metals are priced against tech, against S&P 500, but also what are the multipliers with which those companies are trading at around 2.5. You know, we can easily be at 10 or 12 once they're becoming profitable again. So the tide is very bullish. But the wave currently, the wave is bringing us back. And so it actually gives us the better entry in our position. So don't get shaken out by the wave, keeping in mind the tide. And then of course you have like intraday ripples, like those intraday ripples that the price move 1% up and 1% down. This is something you can trade in the metals, but this is not something I recommend you to do with the miners, because very often the liquidity is so low, and trying to trade 1 cent up or down, you just like gonna lose your allocation, and then you'll see, wow, they're 5 cents up from here and you are not having your bits filled. So be very careful with that, trying to trade the little ripples. Yeah, this is not crypto. This is not where I recommend to do the scalping on a 15-minute time frames. If you really love to scalp, that we can do, and we can have more educational videos as how to do that with crypto. For example, also to mention, yesterday I went short on Bitcoin because I was expecting that volatility. I was expecting that spike. So yeah, I was saying clearly here, it's attempting to break out, but I see a number of issues, and I still expect 66, 68. And this is actually the reason why I went short around 71.5. Around here with the stop loss, tight stop loss around 72.5. And so yes, I'm currently in the short, and I'll explain in a second why. And for that, we simply gonna look and learn a rule of the volume. When I see those sustained move up, but the volume is not confirming this move, and I can see those across multiple exchanges. This is Coinbase, for example, but the same picture, you can go and check. I'm not going to go through all of them, but the same picture applies to Bybit and Binance and so on. So what it already tells me, here I see stochastic is curling down, but the volume is not supporting this move. The volume is not supporting the breakout. And then the next thing I see here, I see the SFP. If you remember my Wednesday video, I introduced you the idea of swing failure pattern. It means we are kind of creating the higher high. So everyone can say, oh, well, we actually higher, especially at that given hour when we are really like kind of breaking out, here and here. But what happens in reality? We are not breaking out. We are swiping the liquidity of all the people who went short here, because the market maker wants to get the prices down, especially on a weekend, especially on a low liquidity, especially after very conflicting data that can postpone and reprice the idea of cuts to take place. Where it's going to bring us, in my opinion, 66, 68K are given, and there is no need to rush. And that's why I was telling you all the previous week, the Bitcoin would gonna come back to those prices. Alts would bleed even further. So there's no need to get overextended allocating your capital to crypto right now. Trust me, I am telling it not just because, I am trying to get biased in my opinion. I'm very happy to admit if I'm wrong, but this is what I see in the data. And what I say about the data, I also mean, of course, our open interest data. If I see this huge raise on open interest and people are longing and, funding going red across the board, but the price is doing nothing. Price cannot still get over this limit. And then I go into other resources and I see how much of asks are sitting and all these limits on Coinbase. It will be extremely hard to get through that sell wall, but the people are longing straight into the resistance. First, I want the puke to happen. I want all these late longs to get punished. And that's why I'm telling you, we gonna beat around 66,000. So let's put a trade on the charts for now. I'd love to beat 68.3, this previous order block that cost us an expensive move. We're still in the range. The range is here. Don't forget, guys, we don't beat the upper side of the range. We are getting head shorts there. So I'm still hanging in the short just to protect my spot positions. But I'm expecting the Bitcoin to retrace at least to 68.3. And my stop loss would be the lower of this week. So I don't want many swipes here. And my take profit in this case would be this high, the previous highs, to swipe the liquidity. In case we would like to go longer, in case we would like to go down, first we want to liquidate all the people who are short from that high so that market makers can recover their positions on the way up. That's my simple game plan for Bitcoin. Moreover, I'd love to give you a couple of altcoin trades. First of all, the Bitcoin dominance is meeting its resistance points, so there is a probability we can bounce down from here. Watch out, of course, because the DXY closing the week with such a green engulfing, very bullish candle can definitely give us the spike and take the liquidity from those highs. So I am giving you the trade, but it is to keep in mind it's just a short-term scalp, and no need to, get your whole portfolio allocated. It's just for us to learn, to see how the futures work, and to also make a little bit of money meanwhile. First of all, we entered BNB at 600. Right now, it is doing extremely well. It's roughly $100 from entry, or 20%. I recommend taking partials here always. And the next trade I actually also announced in the trade alert, and I think we can definitely have a look into those. I guess that's Atom. I am showing you where we added it. Let's just search for. Yeah, I would recommend it to go at around 8.3 and stop loss at around 8. So let's have a quick look how Atom is unfolding right now. We actually didn't touch 8.3 on this swipe. We still can allocate. In my opinion, all alts look quite similar. I think if Bitcoin is going to push higher from here into the CPI, there is a probability that, of course, high probability that alt's going to follow. We're still kind of in this range. We saw this deviation. We saw these deviations, right? So honestly, yeah, 8.3 will be the middle of this range, but maybe it's not going to give us a retest. Frankly speaking, it's quite dangerous here to just go blindly long. So this is something you can do, is to keep this limit, 8.3 your entry, roughly 8 is your stop loss, and you targeting the order block in the deviation above the upper range, so something around 9.1. I think it's a good trade because we also might, have like this little swipe down on the low liquidity weekend. And most importantly is, of course, to synchronize your longs with Ethereum. And for me, if we're going to go here on the smaller time frames, Ethereum definitely requires to overcome this resistance of 38.20. As soon as we are below here, I'm actually not so much interested in alts. We might need several attempts to do so, but as soon as we start accepting above, obviously a lot of alts, including ETH, betas like Arbitrum, for example, or other L1s like Aiden in this case, would do quite well. On the other hand side, just to let you know, normally the trades that we are taking here on the streams, I try to take the high probability trades. So for example, in our API 3, we are roughly 37% up. I actually recommend it to close here. So we have left this trade at around 3.1, 3.2. So that's all fine. There will be more probabilities, but it's also quite probable that if API 3 starts to accepting into this upper range, maybe after a small drop here, then it is likely for it to push another 30-40% up. And when it comes to trading alts, I am obviously recommending you to start exploring the decentralized exchanges, because there is no need for the KYC, there is no need for dealing with compliance and other regulatory scrutiny. And in my opinion, there will be more and more of those coming, especially in the Western world. Maybe the situation will be slightly better in Latin America, but when it comes to Europe, Australia, the North America, yeah, I really like in this case D-Gate, as I mentioned last time, simply because the liquidity among all other decentralized exchanges is very good. The slippage is very low. It's also, the trading volume they have is in billions. There is millions of trades that have been already conducted. They are providing the all pairs possible, so there is no shortage of alts that you want to trade. I mean, everything that we mentioned right now, Atom, API 3, obviously Ethereum, and so on and so forth, but also all the meme coins if you want to, like long Weave or Pepe or whatever. Anything, as soon as Ethereum is accepting above 38.20, I think there's a bunch of things that are gonna run. QNT Quant, for example, you can look at the chart, is like absolutely squeezed down. There's so many late shorts piling in, so yeah, the breakout will be very expansive in this case, and so on. But we are getting closer to the end of the video. However, I'd love to showcase to you a couple of the plays that we've been observing for a while here, and finally they are paying off. First of all, PayPal. If you are the member of the alerts group, it's not going to be a surprise for you that I've been bullish on PayPal starting from 50s. I've been indicating that I believe the company with the price to earning ratio that it has at 1 digit, and with an amount of short interest, and with also a lot of people slipping on it. I mean, I can attach the link to the video as we covered PayPal in details. I was showing 95 strike price January 2026 calls that I'm adding to my portfolio and so on. So both on PayPal and Palantir, we are having beautiful engulfing candles, and I'm on daily here just for you to understand how bullish we are, just to come back to the previous zones, either to the gaps or to the previous zones of supply. In this case, my targets would be 76 and 96 respectively. And if you're gonna point those out on the chart, then you're gonna see that this is, despite it looks like a small and very humble move here, it's still for the very nicely fundamentally positioned company going to provide us 15 and 45% from here. And I also even indicated in the group, in others group, because PayPal is something I'm observing closely. I've been saying at that level that PayPal has found the bottom, and that the way we're accepting above $63 is gonna provide us a very nice sustained rally, in my opinion, up. And actually, one day after I mentioned that, I realized, and I also, of course, put it to the group. Let's see who bought PayPal as well. Paul Tudor Jones of Tudor Investment sold 80% almost of his Nvidia position and added almost 1 million shares of PayPal. And Jim Simmons, one of the best investors with like 60+% over 20 years returns, also allocated into PayPal around $64. So with these big guys on board, it will be, in my opinion, a no-brainer for that stock price to just come back and retest its 200-day moving average, for instance. So this is something that's going to be also coinciding with 96. Apologize, I wanted to say 800-day moving average on a daily. We just broke out of 200. That was exactly the level of 63 that I've been indicating. And the second company that we entered also in the Telegram group is Palantir. I am very bullish in Palantir in case of any geopolitical related news, or in case of the escalation that might come from the China-Taiwan side, or can come from Ukraine-Russia side, Israel-Palestine side, Iran. It doesn't matter exactly where it's going to come from. This company is the best, in my opinion, geopolitical hedge. For multiple reasons, I am very bullish on Palantir. I think we can definitely be at the targets of 40. And if you're going to look here on the daily, that's how Palantir is trying to actually break out, constantly printing this Adam and Eve or cup and handle formations. So yeah, you know, for those who watch me for a while, I'm not a big fan of diagonal lines, but it's also something that would bring a lot of momentum traders into here. And we are closing here right above. As you also can see, 16th of May, we entered Palantir at 21.7, and my reasoning for those was obviously the technical chart, but also the geopolitical reasons I mentioned. And on top of that, Standard Dragonmuller, a renowned investor, has disclosed his position, almost 1 million shares of the average of 21.3. That was around also our entry price, and that's how it plays from now. So if you are not the part of the alert group, I really highly recommend you to subscribe, because it's free for now for the report data dash report subscribers. So it's like less than $1 a day, not even a cup of coffee. And in my opinion, the value that I provide there is immense, because if you are remembering, I've been also reminding you guys to please enter the miners. When you were rushing to get into Bitcoin, I was telling you that miners would outperform. Since then, 2 weeks, Iris did 124%, TerraWolf in just, this is daily, we're talking about 4 days, 50%, Hut 8 in just 3 days, 23%. And what I was mainly mentioning in my Telegram group is for the people who don't have the time and capacity to observe a particular mining company, to enter the Valkyrie Bitcoin Miner ETF, or WAGMI, WGMI. We entered it at this W formation, like double bottom formation, or at $14, and it's 40% right now in a matter of 10 to 14 days. So this is exactly the same reasoning why I am bullish on silver miners, because when the company underlying fundamental asset is moving, the company itself provides a very nice leverage. That's why I'm telling you, it's much better to get exposed to the companies that are exposed to Bitcoin without the risk of getting liquidated, rather than longing Bitcoin on leverage. Because of course, all this data like NFP, volatility, guys, you've seen today the volatility on non-farm payrolls. Imagine what's going to happen on the 12th of June on the CPI volatility. A lot of you will be shaking out of the position. So if you have the higher conviction, it's better to be allocated to the crypto world, but through the stock market. And that's what unfortunately a lot of people in crypto for a certain reason don't understand. It caused them anger. They said, Ross, I came here for crypto, you are not showing me the ticker in crypto. I'm like, yes, I'm bullish on this market too. I said multiple times, even if I'm telling you about the correction, because this is my responsibility. I feel this is my responsibility to let you know when the price is going to go lower. I am still expecting at least 88,000 per one Bitcoin within this year until December 2024. So think of the companies that are yet barely profitable. Cypher mining, for example, Cypher mining and trading at around $4. It easily can go to 8 in a matter of 2 weeks if Bitcoin is actually accepting here above 72,000, right? But please don't rush, as I indicated on the Bitcoin chart. You don't want to get long before we accept above that zone. Can it happen? Yes. Can we also drop down from here to 66? Also very probable, yeah? So have a bit of patience. In my opinion, we're in a range high. There's no need to rush here. 68 will be your first level, as I mentioned. 66 will be your second level. But with all that said, I wish you all a relaxing weekend. Please touch the grass, take some good care of yourself. Don't forget, trading is not just about TA, it's very much about balancing and controlling your emotions and overall being at peace with yourself. So rest well and have a good weekend. Love you all. Bye.